Great to be here on behalf of Liberty Coin and Precious Metals. They're a smart group, really nice people. My good friend David mentioned CNBC. I have to laugh because some of what you're going to hear today, many of you won't have heard before. I was on CNBC, and Ron and Son interviewed me in February of 1999. And as soon as they heard what I had to say, that was the first and last time I was ever on CNBC. So I don't know if that's going to see me there too much too soon. I'm chairman of something called the Gold Antitrust Action Committee, GATA. We were formed in 1999, right before the CNBC appearance, to expose the manipulation of the gold and silver markets. At the time, we thought it was just bullion dealers: Goldman Sachs, Morgan Chase, Deutsche Bank. We realized that as the months and years went by, it was much bigger than that. It had to do with the U.S. government, the Fed, the Treasury, the Exchange Stabilization Fund, the Bank of England, the Bank for International Settlements. So it was a much larger operation. We called it the gold cartel. And since I don't have a whole lot of time, I want to just try to get on a couple of points and bring out some of the old stuff that will be important to you here because you're at the Money Show. But if you want to know more about GATA, you can go to gata.org, and you can sign up for our free mailing list. And my colleague Chris Powell does so well. I have a website, the Metropole Cafe. You can do a Google on that, find it, and sign up for a 2-week free trial if what I have to say is of interest. Not long before GATA was started, I was working with a colleague who was very well known, a guy named Frank Venerosa. And he wrote this thing called the Gold Book, which was quite the production, and I won't go into it much, but the most important thing to me at the time was, he said the gold loans, which are gold loans from these bullion banks, the ones I just mentioned, borrowed stuff, a bullion from central banks, were back then a big deal, like 8,000 tons, and everyone else thought they were negligible. And everyone kept saying that the central bank gold loans are 32,000, said no, we said it's much less than that. And we were pretty sure we were right, and won't go into that, but I think events since then have proved that. And we realized that at the time that there was a 1,500 ton per year supply-demand deficit. Now that's a lot of gold, of demand over supply. Where it was coming from was surreptitious gold borrowing from the central banks by these bullion banks because they wanted to keep the price of gold down. So well, why would they want to do something like that? And again, we have a lot of backup on this, but it all started with Robert Rubin when he was the CEO of Goldman Sachs, and when he started borrowing gold when interest rates were way high, he could do it for free. And he became Treasury Secretary, and it became the linchpin of his, what you may have heard of this before, this U.S. strong dollar policy. Don't hear about it anymore, but the linchpin of the gold price suppression, of the strong dollar policy, was to keep the gold price down, to make the dollar look better than it would have otherwise. It kept interest rates lower than possible. And in general, gold is bad for business, for Wall Street. It's bad for the politicians. Right now it's bad for the Obama administration. What happens when every time you see gold take off, skyrocket? What are they talking about? Too much inflation, the crisis, bad for the dollar, something's wrong, it's just not good. So it's in their interest to keep the gold price down. And they realized in 2001 they were keeping the price down below $300 an ounce. They got some big hedge producers like Anglo Gold and Barrick. These are big gold producers to hedge their production forward, and they used them as allies to keep the price down. There was a different agenda there. But as I said earlier, they were going through so much gold that they realized they couldn't do it. So starting in 2001, we began what I call a managed retreat. Gold's gone up until 2 days ago. It's gone up 12 years in a row. And I don't think any asset class has ever done that in history. So some people will ask us, well, geez, how could they'd be rigging the price if gold goes up 12 years in a row? But remember, they have to, going back to that supply situation, they have to maintain control over their supply. So what you'll notice, I'll bring a few things to your attention. They have a mantra, the bad guys as we call them, is never to have too much excitement. And there's certain things in how they do that. the past year or two, gold will go up 1%, and every time, not every time, but most of the time then it stops for the day. You'll notice this over and over again. It's a 1% rule, we call it. Then they have certain times when they sell during the day. I call it Plan A. It's when their London traders go to work. See, Christ be doing something that's around 3 in New York. Then Plan B, the physical markets price what they call the London fix, where they do all the pricing for the whole world, and they attack it at once the pricing is done. Plan B, and then Plan C, a lot of times they attack the price of gold when the COMEX is closed, which is where they trade it on an exchange in the aftermarket. And then they tend to always attack gold around certain reports, jobs report, when Ben Bernanke, the Fed chairman, speaks, and so on. And you'll notice this all the time. I use the term black is white and white is black. Almost every time. When gold should be going nuts is when it goes down the most. A guy wrote me today and said he's never seen so many bullish things in all his life about gold as we have right now. And I think, I don't know, gold's going down like 11 out of 12 days or something like this. It's just been bombed of late. And again, it's because they want to shoot the messenger. We believe, and have talked about this, that things are so bad in Europe, which gets worse every day, and they do nothing but kick the can. In the United States, which isn't much better, look at California with $16 billion deficit. They're getting ready for some big time printing of money, quantitative easing, whatever you want to call it. So black is white, white is black. What do? They bury the price of gold and silver ahead of this to get it off the investment radar screen. Because right now, if gold and silver were doing what they ought to be doing and acting like normal people would think they would, everyone would say, geez, well, you can't do this. Look what gold's doing. You're going to create too much inflation. But they nullify that. And they've been doing it year after year. But since leap year day, I have never seen anything like what they have done over and over again. You can see them if you follow what we do every single day. Their signature is there. Now, GATA has, just so you know a little bit more about us, we've had 4 international conferences. We just had the last one at the Savoy Hotel, 400 people attended, 38 countries, sold it out. We had one in Durban, South Africa, Dawson City in the Yukon, Washington, D.C., and they've been big league deals. And David was at the one in Dawson City and thought it was one of the finest conferences he was ever at. And we work hard to make these very professional operations. A lot of time, if you hear the word GATA, or Gold Antitrust Action Committee, you know, they look at us like we have 2 heads and the Martians. But if you really understand how big business is done in the United States and how they operate, what we're doing is just common sense, and it reveals itself all the time. Now, at that conference, the price of gold in the Yukon, 2005, price of gold was $436. And I was jumping up and down that it would take $3,000 to $5,000 gold to clear the market. And that was a pretty big statement back then because the market was quiet, wasn't doing anything. But it's proved out that that's, in terms of our camp, many people think that that's really a conservative estimate of where the price can go. And again, what you're going to see is this managed retreat. And in my opinion, you know, we were at $1,900 plus last year, and now we're, as of today, $1,544. They're just going right after. It's a screaming buy for those of you that want to have, you know, investment for the reason that Dave and talk about and Liberty talks about. It's a great opportunity, and you have great company if you're looking at it now versus running away. While this gold cartel is selling, and quite frankly, other funds are selling, and traders want to sell because they see what the gold cartel won't let the price go up. But who's on the buy side? Your big central banks like China, Russia, Mexico, and they're taking advantage of times like this and just saying thank you very much and scooping it up. And meanwhile, the gold cartel is going through more and more of its supply. So you'll be in very good company to take advantage of this dip that we're seeing now. Like David, and I feel this is a very important point, I'm a big fan of silver. And it's very important how this is tied together, the manipulation of both, because the gold cartel realized, since both gold and silver have been money in U.S. history, they couldn't rig the gold price, which is really what they want to do, and not manage the silver price because it'd be too big a dichotomy. So they decided to rig the gold price. And it's interesting because you wonder how they do it, because as Dave knows better than anybody, you know, years ago the United States and other governments had all kinds of hoards of silver, and they don't have it. You know, the United States says we have 8,138 tons of gold. Well, maybe. There hasn't been an audit since 1955, if there ever was then. GATA's, from Freedom of Information Act, we've gone after the Fed to reveal what they're doing in the gold to find out. They won't say anything. But we did get a check from them for nearly $3,000 because they withheld one document according to a judge who reviewed our case, and we're going after the Fed again under Freedom of Information stuff in the months to come. So getting back to how they did it, well, all roads point to JP Morgan. And it's the Fed's bank. They're the biggest short in the silver market. It's been this way for a long time. And it's a little bit of a stretch here that this is what they call exchange traded funds, ETFs. And the silver one, SLV, who's the custodian of this ETF? JP Morgan. Who's the biggest gold short? HSBC, another major bank. Who's the custodian of the big gold ETF? GLD? HSBC. Coincidence? I don't think so. So, we have been going after Morgan with the CFTC and the government to expose them for a very long time. I met with the CFTC. We've asked them to, they say they're hedged with these positions. We've asked them to declare this. And speaking of hedge, now this is, I want to thank JP Morgan for my presentation here. And what happened this week, many of you follow the financial markets know that a big stink has been made about JP Morgan and this hedge loss that they had in their financial operations, which quite frankly shouldn't be anything. They made $18 billion. Who cares about a $2 billion hedge loss? Hedge loss, they say they're hedging against, and this is where I think the problem is, and it could be 5 times or more than that. They say they were hedging it, an economic hedge. What's an economic hedge? You could say that about anything. And I'm bringing it up here because it's a big stink and going to remain that way. The Justice Department looking into it. We've asked the CFTC, who runs the exchanges for in gold and silver, supposed to monitor them, to come back to and prove that what they're saying they're hedging in silver is really a hedge, just like this other thing. It was just nonsense. But of course, the CFTC does nothing. And again, it's the Fed's bank, and you won't see, unless they blow up and the Morgan thing gets much bigger, all these investigations into Morgan, you know, probably won't go anyplace. So it's just, it'll be interesting to watch, but I don't see it. But in terms of silver, our featured speaker in London was Eric Sprott, Sprott Asset Management. He's one of the most visible guys now in the whole world speaking about silver. And by the way, he ironically enough used the same gold book as a prop for that conference and went back and used his analysis since he was younger. And he firmly believes that silver is going to go to well over $100 an ounce like David. He's even more bullish. And he thinks it's going to be, he comes out publicly all the time saying it's going to be the investment for the decade. And I think once this raid is over that we're going through now, you're going to see, you know, silver take off again and probably outdo gold, like David says. And wrapping up, I'd just like to make the point that all the United States financial markets are rigged. The free market system is not what you think it is. The bond market, it's well known that the Fed and via the Treasury has rigged our bond market. I mean, that's talked about by people, and they admit that, but that's okay rigging. And of course, you've got gold and silver, which are more obvious beyond belief. And then you've got the stock market, which the plunge protection team props up along with something called the Counterparty Risk Management Group. You can look it up on Google what they do. No one knows about it. Their motto is to promote stability. That's why a lot of times you'll see the Dow, things are in the tank, and at 3 o'clock or 3:30, no news, all of a sudden, whoosh, Dow comes right back. And they're fully at work now, doing what they can to keep the stock market going their route, because confidence is so important, while they're bearing the gold price. And I think it's really scary what can come because of what the free market.